Good afternoon and welcome to the NWR Investor Conference. My name is Elliot. I'm a presenter here at AusBiz and we're very happy to have you along as we go through some of the amazing companies over the next couple of hours. I'm going to get to our next one. I will let them take over the stage. But before I do, just a little bit of information about SRJ Technologies. So it's a group that provides specialized engineering services and containment management solution really to elevate a customer's integrity management performance. The firm specializes particularly in couplings for pipelines in the oil and gas market, but it is looking to branch out into other sectors such as hydrogen, mining, and petrochemicals. Now, I'm about to hand it over to Alexander Wood, who will take you through the company, but don't forget, you can ask all the questions you want. You can open up the Q&A button at the bottom of your screen there. Type in your questions because we will do a Q&A afterwards with Alex. But without further ado, I'll let Alexander Wood take over.
Hi, ladies and gentlemen. I'm Alexander Wood, the CEO of SRJ Technologies. I'll give you a recap of what the business does for those of you who may be new to our offering. SRJ Technologies is really an asset integrity business. Our primary interest is partnering with the operators to refine their operational efficiency. We've looked at this by lodging an amount of intellectual property around products which solve problems and refined operation, primarily faster, quicker, and safer. Trying to support the key objectives of most operators, which is, production, reduction of maintenance backlog, and increased safety. The barriers to entry in the market are significant, with long times to prove and secure global class societies approvals, as well as intellectual property, which protects our technologies. The market is a significant market. Just in the oil and gas sector, there's in excess of $1.4 billion of flange connections put in on an annual basis. We've got a very high quality management team with a significant amount of expertise and knowledge in the industry. In terms of the key products we brought the business to market on last September, is really 4 key product offerings. The welдлess coupling is an ability for us to connect pipes from low pressure, benign pipe media materials through to high pressure, high risk hydrocarbon couplings. And it was an objective of the business to have a capability to cover the key size, pressure, and pipe media ranges. We can provide these in all key materials, so there's no foreign material being introduced into an operator's asset. This has a number of benefits we see for other markets opening up, such as potentially the hydrogen market. We also offer a welded, a multi-shell non-welded repair clamp, which allows people to maintain operation when they have pinhole leaking or damage or reduced wall thickness, which tends to occur in multiple productions, such as aluminium production, which is an area which is of interest here in Australia, and we see a significant amount of more complex repairs being made. And we're looking to progress to trial these products on a rental basis to some of the key producers working in the aluminium sector. Boltex is a product which we've developed to allow operators to change out failing bolts and studs in flanges. There's huge number of flanges, as people will have seen in their daily lives, connecting pipes in the world. Generally, to maintain them, they have to be taken out of operation. This product allows the maintenance of flanges while they can remain in service. We see this as a major, the product which will be a major contributor to our revenues in 2021, and are already seeing sales of this product and see that it will be a key solution provider to the industry as the industry struggles in its rebounding with a lack of technicians as we get into Q3, Q4, when it's predicted to be under significant pressure. During 2020, the key focus has been on safety. Most asset owners and operators have reduced scheduled maintenance and focused on safety critical maintenance are bespoke repair enclosures. This one here was one we did in Kwinana in West Australia for BP on their refinery down there. We tend to design these, turn them around and deliver them within a very short turnaround. And that's kind of been a key product we've been able to design and deliver in country to support the industry in the kind of hibernation phase that the industry went into during COVID-19. We have developed or started developing a number of new offerings within the business. We see most of our, or all of our customers having a desire to approach the digital landscape in relation to the data that they're capturing and actually ensuring that the data is delivered into usable information. We've developed and are completing beta testing of our digital platform. We're in talks with 2 operators to deploy this currently, and we expect to receive the first purchase orders for this shortly. This will give us an ability to help operators capture data and turn that into useful information and look at where products such as ours and others need to be utilised to allow them to operate more effectively. We see the world's desire to kind of approach hydrogen gas. We are aware of numerous problems which are technology challenges which are a barrier to foreseeing that reality. There are 2 hydrogen projects under construction here in Australia at the moment. We have access to both of them, and we have a number of key parties who are looking to join a joint industry project to help deliver some of the solutions which could be a key part in the delivery of the world approaching its desire for greener technologies. SRJ, all of our technologies are very well placed to support the changing energy mix as we move from fossil fuels to greener energy solutions. In terms of milestones, post the listing in September, you'll have seen that we've settled a number of key strategic relationships with the likes of Mitsui, which is progressing very well. We've received recently our first purchase order from Modec, which is the world's largest FPSO operator and wholly owned by Mitsui. Zamil, a partner business of Mitsui, is the largest, or Zamco, owned by them, is the largest chemicals business in Saudi Arabia. We're currently awaiting some lift on travel restrictions to progress with some purchase orders with them, but we see them as a future strong player on our balance sheet with significant access and opportunity in the marketplace. The fact that SRJ is able to manufacture its technologies close to the client is a massive benefit to a lot of the MENA region. Saudi Arabia particularly have a favourable tax environment for locally manufactured products, which we assist Zamil get a top level score on, because our technologies can be manufactured in country and delivered to chemical facilities and the petrochemical industry within the Saudi Arabian border. We've settled a relationship over east in Australia, where I'm based currently, supporting PSSS. We're working with the likes of QGC, Shell, Monadelphous, and some of the key businesses, Enemec, over here to move into the market. There's a number of interesting opportunities as the industry rebounds and we see key maintenance schedules. So we believe that there'll be a strong player in supporting the balance sheet this year. We're working with the likes of John Crane on some groundbreaking aerial detection technologies, where SRJ is looking to support them with repair technologies once they identify hydrocarbon releases, which plays very strongly into the desire for the world to control the green element of the industry and operate as efficiently as possible. The industry has really started to rebound in March this year, seeing tier 1 operators call on their shutdowns, the likes of Exxon and Shell pushing forward with big shutdown campaigns. We're seeing large uptake of the global flotels for offshore maintenance projects, and really Q3, Q4, we think the industry will be under significant pressure to support that. SRJ has manufactured 15 inventories of Boltex clamps, which will be deployed to key global strategic locations to support this rebounding. 50% utilization of that inventory would see about $7.5 million worth of uptake, which we anticipate will be relatively strong as we move through the third and fourth quarters into 2022, when there's significant amount of maintenance backlog from the dormancy of 2020. In terms of the partners and relationships, we're looking to support the rebounding market as we're currently seeing it. We're still working strongly with NMEC, delivering solutions here and in West Africa. We're currently next week doing onshore trials with 2 operators for Angola, where there's a large FPSO fleet sitting offshore West Africa. We're also working with NMEC on the offshore fleet for Nigeria and Ghana. Shipments left Australia this week, destined for West Africa to support those campaigns, which are now moving forward with vigour. NMEC have got a good setup there, and we're utilising their bases in Ghana, Nigeria and Angola. Mitsui are working very closely with us. They're being a very good conduit to a number of relationships. We are working closely with them with Woodside, and accessing a number of their portfolio businesses, as I mentioned, having received their first purchase order after several months of work for vendor approval with Modec. In relation to John Crane, they've deployed some of their first technologies in Brazil for their aerial detection, and we're working with them for their initial opportunities in North America, looking at some of the pipelines of some of the North American operators, where we hope to be, or we will be supporting them with the repair and containment solutions. As mentioned here with PSSS, we're engaged with a number of the regular operators here, such as QGC, Shell, QAL, Santos, and are working closely and have a number of tenders currently in the mix with those guys, and believe we can support some of the key opportunities in the local market in the east of Australia. In relation to sales pipeline, the sales pipeline appears to be ever growing with a global aging fleet of assets and a changing energy mix of new builds for the changing mix of desire for the world to progress away from heavy fossil fuels. Australia is very well placed in relation to its LNG market and its early stage movements on hydrogen. Just looking at the offshore vessels, which are a key target for us, this shows the vessels in the marketplace and the small number that we're currently engaged with, which have already delivered $6.5 million worth of tenders that we've made, as these operators move out of their safety critical only maintenance phases back into trying to attack their global maintenance backlog. We're still increasing our industry partners in relation to manufacturing partners, having now 6 manufacturing partners here in Australia who've been strong deliverers in terms of the manufacturing. We've delivered 7 Boltex inventories in the last few months to attack the rebounding market. We've got another 8 being completed by the beginning of April, generally being shipped from Australia to key global locations. Because of the business being here, we have concentrated manufacturing here in Australia, just from a quality control standpoint, having not been able to have our key engineering team travel to assess that. We are very diligent on making sure that we only deliver product which meets the full requirement to the market. COVID, as I've mentioned through the presentation, has had an effect in the industry and putting it into a period of kind of dormancy. Most of that is now coming off, whether it's because things are changing or because we're living with a new normal. We are seeing aggressive movements on maintenance campaigns with Exxon and the likes really pushing hard with maintenance campaigns, which started late February, early March, and we're engaged with 17 vessels currently, pricing 8 vessels work, and believe that's likely to grow as the world moves forward with dealing with the impacts of COVID. The board and management team, we still believe, is very strong, and creating numerous opportunities. And I think there is never always a clear nexus between the operation of the business and being able to translate that to the market. But I believe through Q2 and Q3, we'll see significant progress in terms of monetizing the existing portfolio of technology in the business, and bringing on stream the digital and progression towards SRJ playing as a technology player, providing technology solutions into the hydrogen space. And look forward to updating you all as we progress that way, and happy to open for any questions.
Wonderful. Thank you so much, Alex, for taking us through it all. I guess sort of kicking off, where do you see the biggest risks for the business going forward, and how are you mitigating those?
I think risks are very closely a very close bedfellow of opportunity. What the market has seen in relation to COVID is it's really questioned multiple contractors accessing platforms for infection control. So we're very comfortable with our ability and are strengthening our ability to deliver in key regions such as Brazil, West Africa, North America, Australasia, because the kind of global marketplace of everything being manufactured in Norway and delivered to key locations just hasn't been effective through COVID. It's caused numerous problems, and our ability to operate in individual markets when they've become isolated from the world has been a key element, which has allowed us, in the small volumes we delivered last year, but it's allowed us to support and gain customers. And I think as the market will see as we move through 2021, we've achieved a lot of vendor approvals in the last 3 months, which have been being worked on probably since we came to market. And to continue to pursue that strategy of gaining abilities to support customers in the geography they're operating. Also, adding the key elements such as digital and an ability to be a player across the energy and mineral space rather than just in the hydrocarbon space, given the world's shift in focus, which has become more pronounced during COVID, I think has allowed us to refine those objectives which were already in play, but probably accelerate those given the focus that we're seeing from the tier 1 operators and the new players coming into the hydrogen space.
And in terms of what you were just discussing then about that sort of acceleration, I guess, to more carbon methods such as hydrogen, do you see, we'll list some of the other sectors that you are already branching out into, but do you see any other sectors being added to that list?
Yeah, I mean, we've delivered in the last few months to, ammonium nitrate, to aluminium, and we see a continuing ability for us to refine our products from probably the more complex, more expensive products that we're pushing into the high risk hydrocarbon space, to bring the price point down to allow the benefits of them to be utilized in the mining and mineral space is probably an objective the business will continue to pursue. We're working with a number of operators here who want to utilize the technology, but we need to work with them to reduce, and volume may be a key to helping them achieve that. The benefits of the simplicity are attractive. The price isn't necessarily attractive, given we've been meeting incredibly stringent requirements in the oil and gas sector, which are less so in some of the less risky operations and ways that are operated in those sectors.
And when it does come to those sectors, do you have any particular competition, or would you be looking to do some M&A activity in order to further expand and grow?
We wouldn't discount some M&A. I think the objective of the business is to focus on monetizing the existing portfolio, and we've got a pipeline of sales, and initial purchase orders now landing, which allow us to do that. And we want to ingrain our technology with certain key customers, which we have invested a large amount of time having them approve the technologies across their fleet. And now the fact we're seeing them order on initial vessels is likely to see them go through. And just with 2 of our clients, we cover over 30 FPSOs around the world, and they've got growing fleets. So that's a significant target. There are other opportunities we're seeing in the M&A space, but we'll probably sit and observe those certainly for the next short period while we see our existing products gain reliable revenue traction and we add our new products to the mix. But yeah, we obviously wouldn't discount a synergistic acquisition if it came to light.
Well, Alex Wood from SRJ Technologies, thank you so much for taking us through the company, your plans for the future, and also answering those questions. Really appreciate your time today.
Thanks.